Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Tuesday afternoon. Lovely to have your company. I'm Juliette Sarli, and wow, have investors come back from that 4-day Easter break, pressing the buy button. Let's have a look at where the local market is finishing out the day's trade. A 1.7% gain on the CBO 200, the S&P ASX 200 index tracking its strongest close in 4 weeks. We've got the S&P ASX 200 index closing firmer as it heads into match off by around 1.6%, 135 points to 8,715 for those who love those psychological levels, back above the 8,700 point level, and all sectors are in the green. Tech had a particularly solid day. At one point it was up by more than 6%. Looks like it's finishing up by about 3.5%. Worth noting it's up by 6% over the past 5 days. So let's get into the thematics as to why we have had this Tuesday takeoff with the market at one point up by more than 2% on open, and as I mentioned, the ASX 200 targeting its best close in a month. Now it is deadline D-Day, US President Donald Trump's deadline to bomb Iranian power straits if the Strait of Hormuz is not reopened is fast approaching, and that is keeping oil well bid. Oil up about 1.5% to $115.50 a barrel. And then we had a burrito boom. Guzman Y Gomez, one of the best performers on the market today, up by about 20% at one point. It posted a near 20% increase in network sales to just under $356 million for the third quarter, which was ahead of analyst expectations, citing strong guest demand. Its tie-up with Uber Eats that was announced in February, but of course analysts still a little concerned over its push and foray into the Chicago US market, which is saturated with all those QSRs. Let's have a look at the tech stocks. I mentioned the tech sector was one of the best performing. NEXTDC, I'll tell you why in a moment. It's up by 12%. Life 360, Macquarie Tech, Tech One, all having a good session. We were also keeping a close eye on the mining stocks. They were all looking really solid. BHP up more than 3%, Linus up more than 4%, Northern Star there up by 1.7%. Consumer staple stocks also looking a little mixed there actually. Coles was down 1%, Woolies though up by around 1%. Well, NEXTDC launched a $1 billion wholesale offer of subordinated hybrid securities, sending shares up by more than 12%. Elsewhere, CSL was in focus. It says most of its US product sales won't be subject to trade tariffs imposed by the US president. I mentioned Guzman Y Gomez out with its solid third quarter update. Digico Infrastructure REIT also in focus, but it was lower today. It withdrew its development application for a data center at its Lax One site in California. And Bank of Queensland with an impressive 7% gain. It struck a strategic capital partnership with Challenger, which includes a $3.7 billion whole of loan sale and a forward flow arrangement, allowing BOQ to return approximately $300 million to shareholders through buybacks and a special dividend. All right, let's get his take on the day that was. And welcome to the COB, Andrew Coleman from Team Invest. Good to see you, Andrew. Were you surprised by the, very positive session that we had today, despite this deadline from President Trump hanging over us?
No, I think we all returned with a sugar hit, didn't we? With all the Easter eggs maybe that have been consumed over the last few days. Certainly, I don't think it was what anyone was expecting. Certainly, if you look at how the United States looks like they're going to be responding to the same move. Of course, from a long-term investor's point of view, all of this is just noise. But if you'd asked me, and I think most people, how we thought today would open, it would have been in a different direction.
Yeah, it certainly was not the gains that we're expecting, and let alone like such solid gains. So let's talk through then some of the company news that we saw. Guzman Y Gomez was an interesting one, particularly amidst these cost of living pressures, but perhaps when we are finding it hard to fill up our cars, facing more interest rate hikes, then we're going to go for fast food.
Quite potentially. I think what's always interesting with Guzman and Gomez, of course, is simply the PE ratio that it's trading on. I mean, this was obviously a wonderful upgrade to results. I mean, a 20% increase on your previous 12-month quarter, the previous quarter last year, is nothing to be sneezed at. But it means that with the gains today, Guzman is still trading on a PE of 90 times earnings, which is just absolutely absurd from the point of view of a fast food chain. So I think the challenge for investors in Guzman, obviously did very well today, but long term, it's likely to remain on that path of slowly destroying wealth as share prices decline, purely as sentiment reverts to something much more reasonable for a fast food company. But well done to the team. I mean, 20% in this environment is nothing to be sneezed at. It's just simply a question of what price are investors going to be willing to pay in the long term.
Yeah, absolutely. Well, we're never very far from a Trump headline, and CSL mentioned that some of its US product sales won't be subject to Trump's trade tariffs. I know you look at CSL quite a bit. What did you think about this story?
I thought it was pretty much business as usual. I mean, for those of us who cover CSL in quite a bit of detail, this is not surprising. I mean, the US tariffs always exempted two things. One was critical medical requirements, and second were people with factories in the United States and collection centers in the United States. And the vast majority of CSL's product, of course, is collected and manufactured in country when it comes to their US sales. So I think that's sort of pretty much business as usual. In fact, I'd argue probably that today's gains in CSL was just simply in line with the market as a whole, rather than anything particular related to the company. In the opposite case compared to the burritos we were just talking about, here's a company with very strong moats trading on a very low PE. Obviously, at some point, that sentiment is going to shift between the two companies. Perhaps it will then be the taco trade on the ASX rather than just the taco trade when it comes to Trump.
Yeah, totally. Okay, tech, the strong sector, NEXTDC coming out with that $1 billion offering of subordinated 100-year hybrid securities. 100 years sounds insane. What do you think about the overall momentum in the tech space and what NEXTDC is doing here?
Rather be in NEXTDC's shoes than anyone who's lending into that bond, right? I do think the 100-year on it is a little bit overtalked. It does look like much more to be a traditional 5-year product with the opportunity to extend over time, which perhaps puts a little bit of into perspective why this Canadian pension fund in particular is prepared to back it. But, I think the reality is that NEXTDC needs capital. They are a capital-hungry business. This is a great result, particularly because they had to shelve a $500 million raise in the debt markets only last week with all of the noise coming out of Iran and the United States. So well done to them. Does it make NEXTDC a good investment for equity holders? Well, it just puts another $1 billion ahead of you in the capital structure if anything goes wrong. And at not particularly cheap interest rates. I mean, the note has been written at a 7.5% interest rate, stepping up to over 9% in 5 years' time if it remains, and stepping up again every 5 years from there on their 100-year journey. So from that point of view, I think it's a great proof that they are likely to get these data centers built, but whether that ends up resulting in equity holders getting any benefit, well, time will tell.
Now, you mentioned before that we are seeing a wobble in US futures before this Iran deadline. President Trump saying the military could destroy every bridge in Iran if it doesn't agree to his terms. How much nervousness do you think there's going to be tonight, or is it a lot of it priced in given that we have had so much of this kind of rhetoric and then backtrack over the past sort of 5 weeks now?
It's the classic question. Are we living through the boy who cried wolf? I mean, I wouldn't want to be in Iran right now, or the United States, or anywhere else in the Middle East for that matter. But this is not the first time Trump has threatened hellfire and destruction, if we can put it in those terms. Whether he follows through or not, clearly the Australian market seems today to have believed he won't. The United States is a bit more nervous. I think we'll find out in a few days' time. All I would say is I probably wouldn't want to be driving on a bridge right now, because the likelihood may be low, but the damage could be catastrophic.
Yeah, absolutely. All right, Andrew, have a great afternoon. Thanks so much for joining us, Andrew Coleman from Team Invest. Now, getting back to one of the companies that we discussed there with Andrew was CSL, and that was the, it sort of lent into the same thematic of the stock of the day, which was Cochlear. And Andrew spoke to our expert, Sean Hickman from Market Matters, Henry Jennings from Marcus Today.
In its first half result, it missed expectations by 4 or 5%, depending on what numbers you looked at. Revenue in places was okay, but margins were lower. And the market is very, very unforgiving at the moment, as we saw, especially through reporting season. A lot of stocks were hit very, very hard. So, it looks finally down here, one could say it's showing some value, but it's still not making its way onto our hit list. It's not a stock we're considering buying. It's also, it was pretty well owned, being a fallen angel again. It's pretty well owned. A lot of people were long. it's going to take time for this stock probably to regain confidence.
I guess one of the surprising things is that during all this the conflict we've had in Iran, that some of these fallen angels like Cochlear, CSL haven't really been the defensive stocks that Telstra has held up remarkably well, very defensive, not really exposed to the oil price, and very dominant in the mobile business, of course. Cochlear, 60% of the market. They've got Nucleus Nexa coming along, which is good. Taking a little while to come along, but there's a lot of people that are rusted on Cochlear shareholders. They just love it. I presented to the ASA before, and you ask who holds Cochlear, and all the hands go up.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, let's have a look at the leaders and laggards on an up day for the local share market. Guzman Y Gomez, we talked about its encouraging third quarter sales numbers, sending shares up 19%. Worth noting they're still about 40% down from all time. NEXTDC, we talked about that $1 billion 100-year subordinated note, shares up 12%. Bank of Queensland also was in the news today, shares up by 7%. Domino's perhaps getting a little bit of a lift with Guzman Y Gomez, and IperionX was up 6%. The laggards in today's session included Mesoblast down by almost 7%. Sonic Healthcare Challenger, of course, related to that Bank of Queensland story. In the small end of town, these stocks did well, including Energy World with an impressive 12.5%, while the laggards in the small end of town included Amplia Therapeutics down 34% and Northern Minerals down 8%. Tonight, we get US durable goods orders for February, which are expected to be lower month on month. And of course, we'll continue to monitor the deadline by President Trump to bomb Iranian power plants if the Strait of Hormuz is not reopened. Tomorrow, we'll react to all of that from the Middle East, also the RBNZ rate decision, and a March update from the stock exchange operator ASX. Let's have a look, though, at where we finished the market, day's trade, I should say, and the CIBO 200 up 1.7%, the ASX 200 up by a similar amount, its best close in a month. We have closed high by 1.74% on the S&P ASX 200, 149 points to 8,728 points, with every sector, 9 of the 11 sectors higher. So 2, the consumer staples, and 1 other that I cannot read without my glasses, but I'll tell you what's up. IT, materials, financial, energy, consumer discretionary, utilities, healthcare, telco, and REITs all higher. So that must be consumer staples that did have a little bit of a dip into the close as well. Still a pretty healthy finish to the day's trade. We'll do it all again from 9:45 a.m. Eastern tomorrow. See you then.